Good morning, everyone. My name is Richard Engberg, and I'm an equity research analyst here at Erik Penser Bank in Stockholm. With me, I have Jessica Skon, CEO of BTS, who is we're going to discuss the latest quarterly report. So, good morning, Jessica.
Hi, good morning.
So, if we could just please start with summarizing the quarter in a couple of sentences.
Yeah, I'd be happy to. As you know, we have three main kind of geographical areas. Two of them, Europe and other markets, continued to have phenomenal growth. I mean, currency adjusted of 26 and 23% respectively. Even APG, our smaller unit, was 28% growth. Obviously, what we're not happy with is our EBITDA margin going from 13.5% to 10.7%. And there's one simple reason for that. It's our North American operations, which is our largest part of the business, essentially was flat or grew 1% in the third quarter.
Okay, good. And what industries are you seeing driving the growth this quarter, particularly in Europe and other markets?
Yeah, exactly. They're the ones that have continued to be important industries for us the last few quarters, and my guess is most of them probably moving forward as well. But it's fast-moving consumer goods, energy or oil and gas, pharma, bio, financial services. Those are the main ones.
Okay, good. And in industries, do you also see increase for industries that were a bit down during COVID as well?
Similar. We had a very similar industry focus in early of 2020, which was, software, pharma, bio, CPG, and we executed well on that. They paid off for us. So, and energy as well. So, yeah, very similar.
Okay, good. And if we look at your segments, Europe and other markets, I notice a quite strong margin development in these two, especially other markets. Can you please elaborate a bit about the causes of this marginal development?
Yeah.
Of the margin development?
Yeah, and I think we mentioned this in Q1 as well, but I mean, Philios's plan was to continue to improve profit over the quarters, and the team is doing that. I think in particular in Q3, they hired a lot of people in the first quarter, and they're up and fully productive now. And so I think that was the main one. The other one is just some smaller cost improvements across operations, both in terms of performance management and just some, reduced travel and things like that.
Okay, good. And can you please talk about the slowdown that you saw in the US market related to your clients within the software industry? How has the dialogue with these clients been during the quarter?
Yeah, I thank you for asking. I'm so proud of our team in North America, in particular on the West Coast. One, even the clients that slowed down and kind of hit the brakes back in May, June, early July, many of them now are active clients again. And it's thanks to the constant dialogue and partnering that the BTS team did with them during some of their frantic, darker months out of the year. So we couldn't turn them around fast enough to get faster growth, but in hindsight, it was about 30% of our Q3 target in NAM that stalled right at the end of the second quarter and into the third quarter. So the fact that the team was still able to get 1% growth, I think, is really great. And a lot of the software clients are active now in the fourth quarter.
Okay, good. And looking at the recruitment market, which has been discussed earlier, is it easy to find new employees now, or is it still difficult? How do you see the recruitment market going forward?
Well, the honest answer is we froze any additional hiring back in June for two reasons. Number one, we were just getting hit by the software slowdown, which proved to be temporary. But two, we had hired a lot of people in the first half. So we allowed the people to start in the third quarter if they had offers before then. But we've slowed down our recruitment significantly. So I can't answer you with a lot of data because we've just slowed down the offers. So,
okay, then I see. And another question which I always ask nowadays is the mixture between physical delivery and virtual delivery. How's that developed during the quarter?
You know what? I think we've all gotten comfortable with the fact that it is a mix, right? I would say it's still 50-50. We haven't seen a dramatic shift back to just virtual. We have a lot of clients who we're talking to about doing their Q1 big offsite, so top 100 meetings or sales kickoffs and so forth. And it's a mixed bag of who's going to do it virtual and who's still planning to do it in person. And I wouldn't be surprised if some of the in-person switch to virtual, but right now it's still a mix.
Okay, cool. And lastly, can you describe what makes you feel comfortable in reiterating your guidance for the full year that it will be significantly better than 2021?
Yeah, I mean, it's two things. One is that we see North America getting back to growth in the fourth quarter, and number two, we had such a strong first half. So I guess the third would be the strong currency, but yeah, so.
Okay, great. Jessica, nice talking to you, and thanks everyone for listening.
Okay, thank you.